Peter Cardillo, Chief Market Economist of Spartan Capital Securities, joins us right now on the show to talk a bit more about what's going on globally, especially now that Brexit vote is once again back in focus. Peter, given the recent developments, what are you expecting as a result of the Brexit vote?
I think there's a good possibility that the British Parliament may actually finally approve it, and that would be a win situation for Theresa May, and obviously that would be less of a chaotic divorce from the EU. So I think this latest news lifts hopes that perhaps when the vote comes next week that the Parliament will be unified.
Okay, and globally, if you look at the kind of concerns that we're dealing with when it comes to the Chinese economy, whether it's the US economy, Brexit, of course, continues to be a big overhang on the markets. How are you reading into the overall trade setup at this point in time, and where do EMs picture in this entire scenario, and how are they likely to react and perform going ahead?
Well, there's no question that the global economy has slowed. Obviously, the U.S. economy has slowed as well. And, if you examine some of the macro news that we've gotten over the past few days, there's no question that the economy is slowing. We saw even a very stalled growth in the labor market. Just 20,000 new jobs were created, and today, yesterday we had retail sales numbers, and of course they sort of came up from the previous data. But if you really look at the indicator and examine it, you'll see that it wasn't really all that positive. And so there's no question that the U.S. economy is slowed. And that takes us back to a very important factor, because with the Chinese economy slowing at a fairly fast pace and the United States following, both countries need a trade deal. And so I remain very optimistic that we will get a trade deal, and I think it can happen by the end of this month. So I think that would be so to say, the saving grace for the global economy. That would lift a lot of uncertainties, and I think that would certainly give a boost to investors' confidence and to consumers' confidence as well. And that probably means we could, avoid a hard landing in China and certainly even slower growth here in the States.
Okay, and what is your view on the kind of policy stance that central banks across these key economies and countries have been taking in order to sort of give a fillip to the overall economic picture? Is it good enough a measure, or would they need more stimulus and more support going forward in order to sort of at least sustain the growth, if not see a pickup?
Well, I mean, last week we certainly got some sort of a surprise out of the ECB. When I say a surprise, Mario Draghi had to backtrack on his plans to tighten interest rates and basically offer cheap loans to the banks. And so, that's a step of the first step of stimulus. And I suspect that with the EU economy risk staying to the downside, that we'll probably get some more stimulus. Obviously, we're getting them in China as well. I don't expect them here in the States, but the point is that the Fed probably is going to stay on hold a little bit longer than maybe what we had previously expected. That doesn't rule out, however, another rate hike this year, perhaps maybe at the end of the year, especially if we get a trade deal. So I think, what we're seeing here is the central banks leaning against again, towards stimulating because of the trade war, which has taken a big bite out of the Chinese economy and certainly has weighed on the American economy as well.
All right, then thank you, Peter, for joining us this morning and giving us your view on the Brexit.